Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to talk about the earnings of the Starbucks for recent quarter. If we consider its earnings in the recent past, there has been moves both ways. Its first quarter earnings were showing growth year on year, but in the second quarter, its revenues have dropped slightly, and there has been a decline in the net revenues, net income, which is a bit concerning for the investors because any investor, any shareholder would want the company's earnings to keep rising year on year, quarter on quarter. Of course, that's not the possibility every time, but that is the expectation every time, and this mismatch between the expectations and the reality always create moves and the opportunities as well as challenges for the investors while while determining whether to trade or invest in the stock or to simply sit on the sidelines. So we will try to figure out what is the optimum thing to do in these current circumstances where the going is looking difficult for the Starbucks. Its revenues haven't really grown. Of course, it is still expecting this fiscal year 2024 to be on the positive side. It is also expecting its net income to rise close to 10 percentage point year over year. Of course, that's a tall order at the current circumstances, but we will see how things shape up for the company in the second half of this year. So let us now go to its earnings statement. This is the consolidated statement of earnings from its quarterly filings with the SEC. The net revenues, if we include company operated stores along with the licensed stores. Its total net revenue stand at US dollar 8.56 billion, which is slightly lower in comparison to 8.72 billion a year back. But then, if you consider its operating income, it is showing much decline in comparison to the decline which we have observed in the revenues, and that points to the deteriorating operational efficiency. Last quarter, its operating margins had improved, but it has failed to sustain those improvements in the operating margin. There are multiple reasons for this. Of course, there is also one factor of increased expenses on its store partners that has also eaten into its operational efficiency. The store operating expenses are on the higher side this time around. The product distribution cost is lower as is expected because its net revenues have been lower, but its store operating expenses has gone up. Its other operating expenses are showing slight increase, whereas depreciation and amortization expenses are on the tad higher side. The general and administrative expenses are also higher by around 5 percentage points. So taken together, all these factors are showing that companies' operations are costing much more money this time around than a year back, and that is reducing its operating income. Then, if we add the interest and the taxes, here we have the net earnings of US dollar 772 million in comparison to 908 908 million a year back. That's a decline in the earnings of around 15 percentage point. So there is this difference between the decline in the revenues and decline in the net income, which is quite significant because the net revenues have declined around 2 to 3 percentage point, whereas the net income has declined around 15 percentage point. So there is a mismatch, and it points to the lower operational efficiency for the company. Now let us also consider its cash flow to get a better sense of how the company is managing its operations. From the operating activity, it generated better cash inflows this time around. This time around, it brought in US dollar 2.889 million in comparison to 2.36 million a year back. So this is a good news for the company. But even on these higher cash inflows, it wasn't really able to keep the money in the company's books. There was equally higher cash outflows. If you consider the cash outflow on account of investment activity, there was spending on the property, plant, and equipment, which took away US dollar 1.255 billion, which is almost 25 percentage point higher in comparison to the cash expense of US dollar 1 billion a year back. The purchase of investment is also on the higher side this time around. Then if we come to the financing activity cash flows, there was repayment of the long-term debt of US dollar 1.82 billion. And then if we consider its other significant cash outflow, the company also went for repurchase of common stock of US dollar 1.26 billion. So it has tried to act as a value enhancer for the shareholder. It has tried to return the money to the shareholders through this repurchase of common stock, which has also resulted in the additional cash outflow of around 800 million for the company. So taken together, these factors have doubled the cash outflow of the Starbucks for the last quarter, and this time around there is net cash use of 2.4 billion in comparison to 1.28 billion a year back. Resultantly, there has been cash outflow for the full quarter of 787 million instead of cash inflow, and that has pushed its cash pile, that is cash equivalents at hand, to US dollar 2.76 billion from the beginning cash and cash equivalents of US dollar 3.55 million. I feel this is still comfortable cash position for the company, and in coming quarters we are much more likely to see the increase in its cash balance. Now let us head to the JForex core, the trading platform from the Dukascopy Bank SA. We'll try to see what are the kind of opportunities which might come our way if we take into account the recent price action over different time horizons. In the short term, the momentum has been bearish, and in the medium term as well as in the long run, the picture doesn't really seem to be much different than what we are observing in the short term. If the momentum is bearish, of course, it is better to go for a short selling opportunity. But then the question arises, what is the optimum entry and exit point for making sure that in the eventuality our assessment goes wrong and there is turnaround in the price action of the Starbucks? We don't really want to be losing too much money. So as to ensure that our risk is rather limited and our gains are phenomenal, we get it right, we also have to consider the optimum entry and exit points. And I feel the very well known strategy of sell on rallies is much appropriate for the circumstances. There was this opportunity in the Starbucks couple of weeks back in the early June, but now that is past us, and for the next few sessions, I feel we will have to adopt a wait and watch approach as there has been substantial decline in the recent past and the stock is trading at its near-term low. So in this kind of circumstances, we can't really go for the initiation of the new short sale trade simply because if it goes nowhere, if it goes into consolidation phase in that eventuality we will be ending up losing money, and also if it reverses course from the current level and starts to rise, that will also go against us naturally. So there are these two possibilities which might push us into losses if we were to opt for short sell, which will bring in profit only in the eventuality of this decline continuing. Of course, the momentum is bearish, but we can't really say how long this will last. This like this, and we want to be prudent in our approach. So that is why I feel sitting on the sidelines may be better for waiting for better opportunity is the best thing to do in the short term. Let us see how things are in the medium term. I have expanded the time horizon by changing the candle grade to daily from earlier hourly. Now in the daily time frame, you can see that after showing retracement from the 71 to 81 levels, there has again resumption of the downward spiral in the stock of the Starbucks in the medium term, and this points to the opportunity which we can exploit in the medium term. The only thing which I feel is that there should not be any significant upward move from the current price levels if the momentum, which is looking increasingly bearish, stays this way, and if we see some upward move maybe towards 80, 82 in coming days, coming weeks, and then the price action doesn't really rise much beyond the immediate swing high of 82, 83, I feel we can indeed take our chances and go for the initiation of a new short sale trade as we still have the formation of lower lows and lower highs. So unless there is any significant move on the upside which causes it to rise above the immediate swing high of 90, we are going to see the momentum remain bearish, and in that kind of circumstances, it will be better for us to keep the momentum on our side and trade accordingly. So I would say that using these movement to our advantage is a possibility which might come our way if we keep a keen eye on the price action of the Starbucks over next few weeks, and if the opportunity arises with very limited loss if we go for the initiation of the trade anywhere close to the price band of 82 to 84, we can indeed profit from this bearish momentum. Now changing to the long term. In the long term, the momentum is bearish here also. The price formation is of lower highs, and pretty soon we will have the momentum taking it below the immediate swing low established in the mid of 2022. So looking at that possibility, I feel here also the best thing to do is to keep looking for the opportunity to short. After this steep decline from the 100 odd level to the 70, 75 odd level, it is a bit challenging to find a decent risk reward ratio, and that may take time, maybe couple of months might be required for finding any other opportunity in the long term, because I feel if you had shorted it in the first quarter this year, that would have been the best case scenario. Now that opportunity has passed, and for the future, the best thing to do will be to wait for some retracement, and if the price action is contained below the immediate swing high, then in that eventuality we can indeed go for the initiation of the short sale trade in coming months. So that's my take looking at the price action of the Starbucks along with its earnings report, which is pointing to the deteriorating operating efficiency. The company's operations are eating up much more cash than what was the case a year back, so that is also disappointing the shareholders and investors alike. Now it's time for me to say goodbye for the day. I'll be back tomorrow with a equally interesting company's earnings report to explain to you. See you next time around. If you have found the session informative and useful, do like and subscribe to the channel, and let me know your views in the feedback. Now it's time to say goodbye.